So today's lesson, I'm going to start the recording, by the way. Today's lesson is going to be on changes in state of delivery and order block theory. So I've been talking a lot about this in some of my one-on-ones recently. And what we're going to be doing is evaluating the difference between changes in state of delivery and market structure shifts, how we can capitalize. Yeah, I am recording this. Yep. How we can capitalize on early market structure shifts, CISDs, what that means in context of higher time frame price moves, and why, right, we can trust things like CISDs and early market structure shifts before we see an actual market structure shift. So a little bit of theory, a lot on the charts. Let me share my screen. And let's get right into it. So as always, we'll just start with a blank screen like we always do, and we'll kind of lay out the plan of attack. So change in state of delivery, reinforcing order block theory. So let's do some housekeeping to start things off. A CISD, right, is defined as the formation of an order block. An order block is defined as an institutional of accumulation, right? Or in this case, you can actually be more precise and say offset accumulation, because we have a definition for an order block that's A plus, right? I'm trying to blend things together, right? We want to see some displacement. We want to see a meaningful level of liquidity being hunted, sweep or a stop hunt, and we want it to engage a higher time frame array, or you can just say a PD array. It doesn't have to be necessarily higher time frame. Bonus, right? If SMC. We already know what an order block is. We're now going to look at how we can reinforce order block theory, how we can use order blocks as a more robust part of our analysis, because generally we focus on the classic external range liquidity and internal range liquidity, or as you guys know when I preach, lines and boxes, right? And we say the market generally oscillates between a line and a box, forming a market maker model, right? From external ranges created below consolidations and using internal ranges as the point for the move or smart money reversal, right? A measured move on two sides of a curve. Now, what we can also look at now is how we use order blocks in conjunction with internal and external range liquidity, specifically for a couple of purposes. So, why order blocks / CISD, right? We'll just call it the same thing. And let's talk about some of the reasons. We're going to use them, one, as a bias tool. We're going to use it two. Yeah, what's up?
Sorry to interrupt, just because I think the screen gets a little fuzzy sometimes. I don't know if it's. I think it's happening for Menacey also, but
is
just because you're recording, so I don't know. Maybe it's like you went, then it was fine. Anyway, just I didn't want you to.
That's really good to know. Let me try just sharing my application, maybe not my whole screen.
It was for the two of us. I don't know if it was for everyone else, but
is that better?
Looks better to me so far. Yeah.
Okay, let me know if that changes. Cool, very good to know. Thank you. Sometimes I just start yapping. I don't even read the chat. I actually don't look at the chat. So just like come off mute and tell me.
No, it's all good. I didn't want you to do like a whole lecture and then it's recorded.
No, I really appreciate that. Okay, cool. So why order blocks and change of state delivery? It's a bias tool, 1. It's an entry confirmation, 2. And 3, it's a refinement area. 1 second. Dropping my dog off for daycare this weekend. So I got a text from the person managing his daycare. He's going to have a blast. Going to play with all his friends. I'm too boring for him, so I send him away every couple of weeks to like a really, really nice boarding place with all of his homies. Okay, so why order blocks in CISD? A bias tool, an entry confirmation, and a refinement area. We can also, if we have time, we can get into some conceptual stuff, right? If time permits, we'll talk about conceptually how order blocks function in the context of market maker models. This is the idea of reaccumulation and fair value engines of the market. Now, it's not as important of a concept for today as I would love to rant about, because conceptually speaking, it doesn't matter for your trading. It matters for your understanding of liquidity imbalance theory and what order blocks do, but I don't think we need to use it as much in our trading. So maybe we'll, I'll just, if you want, I have a PDF on this and I explain a lot more about it in my protraction PDF, and I can get into it with you a bit more if you want. But we'll just reinforce it in terms of an actual practical way in the charts. So let's get right into it. Why order blocks and CISD? Let's start with how we qualify a change in state of delivery in the market. So let me pull out a trusty blank chart. I'll just do that for now. Oops, didn't mean to delete my text box. I've done it again. How do I delete all this without deleting my text? There we go. Cool. Let's use this week as an example, right, of how we're going to qualify a CISD and what it means and where we use it. So let's start off, as always, on the daily chart. And we're going to use this week as, we're just going to use the price action from the most recent week to do all the teaching, because I feel like it's the most recent for everyone, and it's probably freshest in your mind, so it makes the most sense. Okay, just let me know by the way if there's any questions. Just come off mute or put it in the chat. I'll try and look every so often. Sorry. No. So let's first of all define our change in state of delivery or order block. Does anyone, first of all, have any ideas for how we're going to define a change in state of delivery?
Activation of an order block or breaker block.
Yep. Activation of an order block. Let's keep it to the word activation of an order block for now, and breaker blocks are a little bit different. We'll talk about them in the future, but activation of an order block. So what is an order block? I've already written it up here, but I want you to repeat it for me. Someone tell me.
Institutional level of accumulation.
Yep. And what does it look like on a chart?
A series of down close or up close candles.
Yep. Into what?
Liquidity.
Yeah, or a key level. So the most important thing to recognize is that an order block is not just any random down close candles or up close candles. And people love to take ICT concepts and apply pattern-based theses to what he's teaching, when in reality, it's narrative-based. So a down close candle to be qualified as an order block requires a level of context which is going to signify reversal. I'm using the word specifically here, reversal, because an order block, or what we're now going to start calling a change in the state of delivery, is a hand tip by the market in terms of what you're seeing in candles that price wants to reverse. An order block is the foundation of a smart money reversal. It is the specific candles that form a smart money reversal. And therefore, without a key level, there is no such thing as an order block or a change in the state of delivery. What we need to recognize is that when we see order blocks in the market, some, for example, would say this is an order block, we need to evaluate if it's at a relevant point where the market can be reversing. So let's take a look and do some basic time frame alignment. So let's choose, this down close candle. Actually, let's go to the monthly chart first of all, mark out our monthly internal range liquidity. It's a monthly internal range liquidity. It's a fair value gap, right? Basically. Now let's say what is happening at this level right here in the market. What we notice is that first of all, we form a divergence, right, with our indices at this point. So here we've immediately qualified that this monthly array has offered us a liquidity sweep with a divergence, right, signifying already that it could be worth investigating if there might be a reversal, potentially. So now we have the ability to look at the delivery state of the candles moving into that key level to determine if once we close above it, right, the market is showing a willingness to move higher or a willingness to move lower. So what we're going to be using change in states of delivery for is not only as an entry pattern, but also a bias tool. And the reason why I say it's a tool is because we can evaluate how price interacts with certain levels. So in this case, the change in state of delivery is these three down close meaty candles that form our SMT in our higher time frame array. As soon as price closes through, we'll make this the daily, this candle's open, this becomes a change in the state of delivery. Now, if you notice, this CISD happens before the market structure shift above this high. This is critical when studying order blocks because order blocks offer us an early indication of reversal. Again, that's the bias and the confirmation tool for areas of interest. So when we're looking at this change in state of delivery, what we are seeing is that as the market trades through this specific open, which is a part of these three down close candles. Now, it can be one candle in the case of this order block. And again, let's make sure we're really defining why it's an order block. Why is this up close candle an order block? Because it forms a liquidity sweep right here. Previous day high has been taken with SMT in the market inside of a key level, which is our redistributed rebalanced array. This up close candle, once we close through it, is offering an early indication of bearish order flow. Here's the SMT right here. I want to show you, right in here with the Dow, which does not come above these highs, right? And the ES, which does not come above this high either. So this is our high probability bearish daily order block. Now you notice the change in state of delivery in this case on the daily happens much before we get the market structure shift, which is going to be below this swing low. Now we're going to study this a bit more in depth, this interaction, but notice how price refers to the open of this candle and then breaks down, creating the market structure shift. Interestingly enough, right, what we can also notice is that we leave this breakaway gap above it, or below it rather, right? And the market continues to trade lower. Now it trades lower, and this is a breakaway gap because of some of the lectures we've learned, right? Part of a balanced price range right here, you can see that. But also because as the market trades through this down close candle here, right? This also becomes a bearish order block with a bearish breaker, right? And we are printing an up close candle, which in itself is a bearish order block. And then we refer back into this candle, right, on the ES. You can see it right there. So what I'm trying to say is that sometimes internal range liquidity doesn't need to be retraced always for you to understand order flow. Sometimes you can simply use the qualification of a CISD or lack thereof to tell your bias. So these are two examples, right, where we can clearly see that the high probability order block that we've defined based on our rules for order blocks, right, is giving us early indications of market structure. We don't get a market structure shift until here, and yet we get a large distribution of over 500 points in the day that forms the daily MSS. This is a tradable opportunity using this order block, right? The thesis of this order block for what we just said is an early structural confirmation. Now let's do the inverse. Let's also use the change in state of delivery. And again, let's explain quickly, sorry if I'm getting off track. Let's explain why this is the way it is. The institutional price delivery algorithm, IPDA, refers to order blocks, high probability ones you've learned about, as areas for high frequency trading algorithms to slam orders long for reaccumulation. Therefore, as price trades, as you can see, into this bearish order block, which is defined as our change in state of delivery, the institutional price delivery algorithm will be inducing longs, right, in this move higher, while simultaneously filling shorts at two key areas, which I've already taught you from order block theory, which is going to be the open, and of course, right, you can see here to no surprise, the mean threshold. Now, because these high frequency algorithms are coded based on this candle closure that you see right here, we can now utilize that knowledge to understand that this, although the market structure hasn't occurred yet, institutional price delivery algorithm is already repricing lower, right? Using this as a tool or a area of interest on a lower time frame. So once price comes back into the open of this candle, right? Comes back into this open, you can see this volume imbalance here. But once it comes back into this open, what it will do on a lower time frame, let's go back to an hourly chart for example, is it will create a lower time frame reversal. Right? This is the idea of time frame continuity. But in this case, we're not using internal range, we're using the order block. The order block, we trade back into it. Where is it? We create it here. We trade back into it during the late London session. And then you can see we get large displacement lower, right? Utilizing our knowledge that this open here should provide resistance, what we can do is we can apply a similar logic and say, what area did IPDA manipulate into the order block, and what was the function of that? We look for the same things that we look for in the higher time frame and the lower time frame. It's all continuous. This consecutive set of up close candles, all of this is an order block. All of these candles right here, all of them. What price does is it trades higher, forms SMT here, which we already know exists. We don't need to look at our charts, but we can if you want. Where's day is it? Monday, 15th of April. Right? Forms SMT in the market. Right? There's no internal range we can create on the daily here. We just have this order block. And then proceeds to break down, right, leading in to the next day's trading. Now, most importantly, once we break structure, right, below these lows, you can see we have a fair value gap, and we also have, I didn't see this was a down close candle, we also have this change in state of delivery. Now, this is how you're going to be able to use order blocks in conjunction with internal ranges for refining your internal ranges and also for the daily bias. In this case, you recognize that we've moved higher into this daily order block, change in state of delivery. Now we've had a lower time frame change in state of delivery. We refer back in to that specific candle in the same way we did on the daily chart. We're now doing it again on the hourly chart. All right, we're doing it again on the hourly chart in this area, and then we break down lower. So that's the thesis behind why a CISD is an early indication of market structure, because there's an institutional sponsorship of those levels. Okay, so now that's how we can confirm a bias early, perhaps. And again, the stop loss, anytime we're looking at that, or the invalidation of that order block, right, that thesis, is always going to be in relation not to just a random pattern, but to the associated narrative. So in this case, this up close candle forms SMT. Stop loss is going to be above the SMT high, whatever that might be. So in this case, it's this high right here, right? That's the SMT high. Likewise, if you're trading off the daily chart, there's two areas you care of this order block, right? The open, and then obviously because we're on a higher time frame, we want to refine that. And we care about the mean threshold. Stop loss in both cases is going to be below this SMT low. So this low in here is the area which price might wick into. Sorry, not actually to that low. It might wick to, but it should not wick below. This is a protected low in the market because we've seen a chain of state delivery. So every move lower, right, into this series of down close candles is seen as an opportunity, right, for the market to be engaging institutionally in longs, reaccumulation, and inducing counterparty liquidity. Every single time the market trades lower is an opportunity once we have that chain of state delivery. And we can see, just like we can validate early market structure shifts with the chain of state delivery, we can do the exact inverse. We can invalidate, right, a certain thesis as well using the idea of order blocks and CISDs. It's something I did today. And maybe we'll go to a different time frame to show that it's all fractal. So today, moving into the session, let's take a look and do some top-down analysis and integrate this idea. Yeah, what was the question?
Please, sorry, I just mind turning on your cursor.
Is my cursor off?
Oh, now it's. Oh, it's just the crosshair. It's just a little harder to read. Don't you normally have like a? Maybe it's not for anybody else.
That's so weird. Should I make my crosshair darker?
I thought normally you have it's like a pointer. It's just a little harder for me to follow.
I think because I'm sharing my application. Let me.
Man, no big deal. Yeah, I'm not trying to.
Now do you see my cursor?
Yeah.
Is the quality still bad or is it okay?
It's okay for the minute. Sorry to be a
trouble. No, dude, that's absolutely fine. It's the only reason I'm teaching is so we can all understand together. So please tell me if there's something that's making it less easy to read or understand.
All right, cool.
So
thanks.
Let's look at this week's price action and use this exact same idea of CISD and order block theory. So what we can see immediately looking at our daily chart is a couple of things. And actually, let's zoom in just to this specific price action this week and look at it from the context of market maker models like we've done before. We can see price traded into an external range high, which was all-time highs, right? Wicking it, right? Closing back below the body of this previous day high, right? After creating an inefficiency. Fantastic. This is a very, very high probability retracement based on our FVG lecture. Price then trades into our daily FVG right in here using these two down close candles. Now these two down close candles immediately become a high probability what? Once they're closed through. An order block, right? An order block that does three things, right? It swept liquidity. Lower time frame, you'll be able to see it. Sweeps liquidity in here, right? Forms an SMT in the market. Where is that Friday SMT? It's a big one with the Dow, isn't it? Right there, right? There's the SMT. And then, right, trades through those two up close candles. So this becomes our change in state of delivery. And one thing I'll actually explain on a bit more here is that when we look at the daily chart, we can see these two down close candles. What I want to do to qualify a high probability order block is not just look at the 2 candles in this time frame that trade into this inefficiency, but I want to see candles that look like this. I want to see meaty down, this is a weird way of saying it, but I want to see meaty down close candles. I don't want to see large wicks. I'd prefer to see small wicks and large bodies. The large bodies of those down close candles are going to give me an indication that that move lower, right, that down close move was the accumulation of longs, the inducement of shorts, and the institutional, right, body of reaccumulation. This wick in here is just a lower time frame body. So what I want to do is into my key level, which I will now write out, which is going to be my daily BISI. I want to wait and I want to go and refine these candles to the meaty down close candles. I know that sounds weird, but trust me when I say it's going to help us in our conversation in a bit. So let's look at where that occurs. On the 4-hour chart, I see these 2 candles, which look a little bit nicer, right? Less of a wick to the sell side, to the buy side. On the hourly chart, I like it even more because I see these 3 down close candles, and this is an up close candle. So all of these candles in here are giving me a very nice, refined change in state of delivery. So I'll mark that out. So this is my daily level, right? But I'm refining it down to the hourly candles that give me large displacement lower, right? And even you can see it even maybe even clearer on the 30-minute chart, right? Really, really clear on the 30-minute chart. These down close candles in here that then lead to this reversal with less of a wick, right? So whether you want to use the 30-minute chart right here, which would be all of these down close candles, right? This is just internal to these down close candles, but feel free to use, this level right here if you want. Again, it's just refining a zone. That's all you're doing. And you're refining it based on the narrative of that price run, right? What you want to see is that continuous delivery. One second, sorry. You want to see that continuous delivery lower and then the change in state of that delivery above the high, right? Ideally creating inefficiency with our liquidity sweep and SMT. That's how we refine an order block. Because again, on the daily, you can see it just looks like, right, a candle with a large wick. But there's an area there which is much more precise, which we're going to care about. So that's kind of something I do. I don't know if everyone does that, but that's what I do. And I would probably just choose, again, these down close candles on the hourly. So once I observe that CISD, right, my bias, right, moving into the week has been qualified not just with internal to external, which also, of course, is going to weigh it. Like, obviously, you're going to use that as a part of your bias, right? So here we have our external range liquidity, right? And then again, on Monday, you can see, right, Monday trades back into our order block and then liquidates the external range liquidity. But more so than that, I'm utilizing the fact that this is a high probability order block to frame higher prices, not just for Monday, right? But for the rest of the week as well. I want to see specifically how this level of price is being treated because it's so high probability because it comes into my daily key level. Okay, let's move forward. As you can see, price trades into the daily order block and, right, several times, and it trades into our refined level on Thursday. This is what I use as a part of my bias coming into today, okay? So what do I see on Thursday? I see my key level has been traded back into this hourly refined level of my order block, which was the meaty part of these down close candles, right? There's also a redistributed rebalanced array, but let's just stick with the idea of the order block in this case. What I saw then, right, which is my bias for today, was a couple things. We form an SMT inside of our key level, again, at the daily swing low. Okay, mark out my SMT. Cool. Once we form the SMT, I also notice we close a candle body above the previous day low. candle body above the previous day low, into my key level refined order block with SMT and my daily fair value gap. Wonderful. So my bias for the day is giving me confluence to expect not a return back into this previous day high. That would be quite aggressive, but at least a return back into premium of this range, because the market has shown me a respect for my higher time frame order block, the refined area of interest that engaged my internal range liquidity. Okay, so now I can go in and use similar concepts, right? Again, we're using bias here. We're going to talk about entry patterns later. It's a different conversation. This is just narrative and bias tools, which I think is overlooked. I think people use a lot of order block and CISD theory, right, for entries, which I do as well. But I think it's so powerful to start utilizing some of this stuff in your like top-down analysis, because they give you such a strong indication of order flow. And they can be very refined zones in some cases, specifically when paired with internal range liquidity, because that's what makes a high probability order block, something that trades into an internal range and displaces away from it, which is our idea of IRL and ERL concepts in the market, right? Notably speaking as well, right? Now that we have our Friday here framed, we can look and see another confirmation tool for why price might want to go higher. If we consider these three up close candles, right, to be the formation of a bearish order block, what is price failing to do? I was talking this with T-Trades earlier today, actually, in the day. What is price failing to do right here? It is failing to create a bearish order block. Think about it. This would be a high probability bearish order block. Sweeps liquidity with SMT, right? With SMT at the YM all-time highs. And then this candle would have closed through. We don't need a market structure shift. We just have the order block. Instead of closing through here, we reprice this devil's mark, right? This is the devil's mark. And we fail to create an order block. Look at the difference in that statement in comparison to the ES and in comparison to the YM. The YM and the ES both, right, below this low on the YM and below this low, or this, I guess this up close candle on the ES, both of these create a change in state of delivery on the Thursday. Expansion lower. Change in state of delivery, these three up close candles, high probability order block Y, sweeps liquidity, right? Candle body closure with displacement on a lower time frame, right? After forming SMT. And you can really see, specifically on YM, how we had deep displacement. That's why going into the day, I was bullish on the NASDAQ, and I didn't want to look at these two indices for longs necessarily because of the SMT and because they both created a bearish order block. So I was using this level here on ES as resistance, potentially, right? This is our CISD. Actually on the daily. This area on the ES, right, was the expected high of this price leg, which is why I did not plan for ES to reach into this high, where I did plan for NASDAQ to reach into this high, because we did not create a daily order block. We did not. Very small nuance, but it's so important because that's the kind of thing that can give you a relative strength indicator. What market is respecting or disrespecting the side of order flow, right, that opposes your bias? Well, in this case, I'm bullish, but I have opposing bias order flow in this CISD. I don't have that on the NASDAQ. And that's why I'd be looking along this one for a relative strength, in addition to all the other things we talked about. Let's go and refine now. Let's use the same concept of building bias with order blocks, not using them for entries, not using them for confirmation tools for our entries, just for bias. Okay, so as we can see, we form our SMT. We're now down to an hourly chart, right? Just refining. And we can see in the overnight session, there's two scenarios for what price can do. So in my mind, we had a reversal at these lows based on all the reasons I just said. And I was qualifying that early. I didn't have structure yet. So I thought there's two scenarios. Price will either reach into a premium of this gap. Again, here's my dealing range. And as you guys know, when price reaches a smart money reversal, a short-term reversal, it will refer back to premium, right? That's a very basic concept. So I'm really looking at this area of my gap, right? My hourly gap has been refined now based on a retracement into premium, which is expected, right? Based on all the things I saw on the daily chart and the order block. Let's get rid of that now. Now let's look at exactly what it overlaps this area here. Would you look at that? I have a bearish order block. Okay, we're using this again for bias creation. This is a bearish order block. Let me make that a minus. Stick with me. How we react to the bearish order block is going to be pivotal in how I approach my bias. But I know that going into the day, I now have a target for a potential move that looks like this. Or I have an invalidation of that for a full reversal. Both ways, going into news as a bias tool, I have an area on the chart I am interested in seeing, which coincidentally enough offers quite a large expansion, at least 2-to-1 for a trade. So immediately, regardless of whether I'm on side about price being bullish or bearish on the day, I can think, here's an area I'm interested in. This order block and premium. Even if we're bullish, even if we're bearish, both ways I'm interested in this area using the idea of order blocks as key levels for bias. Okay, now how do I use order blocks to actually anticipate a move into this area? Well, once we open up for the day, let's take a look at what happens here. We form SMT, right, inside of this low, and then we start to push up higher. Interestingly enough, right, look at what happens during the time where we study price and we don't trade, right? 7 p.m., 6 p.m. till 8 a.m. During this interval of price, we're going to be able to study protraction. And we're now going to use order blocks as a part of our analysis. Price does what? Price comes into a very small imbalance on the hourly chart. Meaningful, but small. This is a volume imbalance, okay? On the hourly chart. Where is it? Okay, this volume imbalance. Now look at the idea that we talked about earlier of how price will either create or not create order blocks. Okay, now we're doing a proof by disproof. So we know we have our huge level of interest for potential shorts. But this is when we need to know to be bearish in the right context and be bullish in a bearish environment. Here is my area of interest of this gap. Above premium, overlapping the order block. That's where I'm looking for price to draw into if I want to go short, period. Because of the daily analysis we did. Now I can confirm that by using order blocks as a tool. What do we fail to do here? Again, look. This is a high probability bearish order block if price trades through it. We can expect a move like that. Now, as you notice, price fails to trade through these series, right, of up-close candles on all three indices. We fail to trade through the up-close candles. Instead, we sweep the low of the rejection block. That's not important. I'm asking you to evaluate, do we close through the potential order block? Why is it a good order block? Right? Why do we care about this set of up close candles? Well, what does it do? It trades into an imbalance. It sweeps liquidity and forms SMT. Here's the SMT. Okay? That's why we care about those candles. Not a random set of up-close candles, those candles for our bias. Not every up-close candle is an order block. Remember, this is a lecture that builds on the order block selection lecture. This is building on it for bias. Fantastic. We are failing to displace below the opening price of this series of up-close candles. Remember, these meaty up-close candles. If you want to refine that, it can be one 4-hour candle, right? You could look at the 30-minute chart. But in here, you can see we have a couple of different order blocks. We have this one, right? And then we also have this one. I prefer to use the continuous meaty set of candles. I know that sounds weird, but it's just go with it. Okay, cool. One area of interest here, we're going to call this, right? A failure to CISD. Again, this is not like a PD array I'm teaching you. I'm just talking about context, just reading order flow. SMT, liquidity sweep, failure to CISD. Then once we fail to change the state of delivery below this candle, we now close through this series of consecutive down close meaty candles. I'm going to say it again, meaty candles, right? 1, 2, 3, 4, all the way down into our level, which also here, as you notice, will form a local SMT in the Asian session right here. You can see it. Right, go to is it with ES? Right there. Actually, do we take it? Might be equal lows. Maybe it doesn't form an SMT. Equal lows. Oh no, it does. Sorry, it does. Yep, there's the SMT. Cool. SMT confirmed. High probability order block. All of these candles. Let's find the meaty candles, what they look like. The hourly chart does a good job of showing those meaty candles. Maybe a 2-hour chart would look even better. Let's see. Again, it doesn't matter. You're just, actually no, because you see that big wick, right? I want to find no wick. That's decent, but then again, there's one set and then another set. So let's just go to the hourly. The hourly gives me the continuous set with this small up close, maybe a 90-minute chart. Ah, there we go. A 90-minute chart right here would show me these 2 down close candles. This in between, just a retracement. Doesn't matter. It doesn't matter. Again, it's not important what time frame. You just want to find a set of down close candles, right? Because we're using it just for a bias tool right now. There's your SMD. Fantastic. Failure to CISD. Then we have a confirmed change in the state of delivery on the hourly chart. Okay, fantastic. We're not trading, guys. We're just studying. What is printed on top of this confirmed change in state of delivery? We have 3 PD arrays, guys. We have this order block, change in state of delivery. That means high frequency trading algorithms are going to be slamming this open. Every time we touch the open, we're going to slam it with a high frequency trading algorithm long. We print a fair value gap in the form of a buy side imbalance, sell side inefficiency, busy. And we also have now qualified a high probability breaker. Remember, a breaker was an order block that failed, right? This is a failed order block. Let's take a look at the most meaty candle that overlaps our inefficiency. This is our unicorn. 3 PD arrays, failure to CISD, SMT at the lows, and the daily narrative. All of this is before the session opens. Why do I have in my trading model daily candle direction as the first thing? Because that's the hardest thing to teach. That's the part where other educators will emphasize time and time again entry patterns, right? They'll be very specific about a model and rules, but if you can't get narrative right, then you're gonna be stuck shorting this entire gap. You're gonna be looking for shorts in here when you really wanna be looking for longs based on this is called institutional order flow, real order flow. And it's hard for me to teach. It's not easy because it requires you to blend so many things, and that's why I've taught you so many things. But I'm telling you, if you can answer the question, daily candle up or daily candle down, 90% of your trade is decided as good. The rest of this is mechanical. This stuff, Follow it like a script. Follow it like a Bible, right? You can just wait for the rules and check mark the mechanical things. But this is not mechanical. This is knowing when to be bullish in a bearish market. This is knowing when to expect a retracement, when to see reversals. What is the daily chart telling us, right? All these things we talked about. SMT, failure to close, failure to create order blocks on different time frames. That is what I want to emphasize. That's what, if I can teach you that, I've done my job. And you can use parts of it, you can use none of it. I just want to be able to teach you how I view price. That's really what mentorship is. It's knowledge transfer. So this is what I want. I know it's complicated sometimes and there's lots of concepts, but this is, if you can spend time focusing on this, the rest of the model, guys, don't focus on the entry patterns. It's not important. I'll prove it to you. You can take 1,000,000 entries. Doesn't matter. Okay, CISD here. Let's look again before the session even opens, right? We're going to mark out our session open at 9 a.m. And we're not going to enter today until after equities open. Why? We have 10 a.m. news. So 9:30 to 10 might offer us an entry. And that's it. We don't want to enter at 8:30. We don't want to enter anything like that. So now let's look at that same idea of the failure to create order blocks and institutional order flow. This down close candle engages our change in state of delivery area, the CISD. This becomes a high probability propulsion block. I don't want to look for a candle that has a wick. Let's refine it. Where's the meaty down close candle into there? Nice. Here are 2 nice meaty down close candles. Here are 3 nice meaty down close candles. I'm going to refine my propulsion block right here on the 10-minute chart. It doesn't matter what time frame. Remember, you can choose to just use this candle if you want as well. I'm just refining the area. That's all. Now notice on the time frame that I've chosen for that meaty down close candles into my area, look at the beautiful array that we print inside of that. It's a 10-minute chart. It could be a 7-minute chart. It doesn't matter because you can still use your time frame alignments if you want. I'm just telling you I want to find something that gives me, that nice meaty down close move. Doesn't matter. So now I have, staying on the hourly, my down close candle here. Is this down close candle supporting price? Or is this down close candle being closed through, creating a bearish order block? As you can see, once again, we have this down close candle supporting price, propulsion block. Call it that. Again, stick to whatever time frame you want. It doesn't matter. It's a narrative tool, not an entry tool. Now, let's also define this here, again, as a failure to CISD. Now, I know our charts look like shit right now. We have so many things on them, right? But look at the narrative we have coming into the session. A failure to CISD, a CISD, an order block. A fair value gap overlapping the order block and the breaker block. A propulsion block being respected, right? And a failure to CISD. Guess how much more beautiful this gets? What else do we see? Before the session even opens, I see an SMT inside of my array of interest. Remember, my trading model looks like this. Daily candle direction, H1 PD array plus SMT, 5-minute CISD or market structure shift, 2-1R. Okay. Propulsion block, failure SD. I'm going to get rid of these 2 things so we can just refine the charts. This is context. Not using them for PD arrays, just context. Here's my CISD. Look at my SMT forming inside of what I call, right? And I talked about this with Menacee or Gabe. His name's Gabe or Gabriel. This is our context area. So now on my chart, this becomes context area. And I have all the tools from this institutional order flow analysis of order blocks, right, that we just did, to say, in here, if my trading model emerges, I will go long. That's it. Now I have a mechanical system I can follow from this area. This is how I arrive at the conclusion that price should want to draw up into my area of interest. That's it. I don't know what's going to happen after this. If you notice, I took all my profits off here. I even told you guys I took all my contracts off here because it was a 4-hour trade. And then I got back long in the PM session. But context area is defined. Now, once I see my SMT, right, inside of my fair value gap, I go down to my minutes chart. Now let's talk about how we can use order blocks, change state delivery, as entry tools. Okay, so now we're going from what's an order block, how do we define it? What's a change state delivery versus market structure shift? How do we define that? How do we use CISD for narrative? How do we use it in addition to IRL and ERL? Why do we care about these specific down or up close candles? Why do we care when they're not created, right? Failure to CISD. Now let's talk about how we use it in the function of trading. So as we come in to my SMT level, I'm now on my minutes charts. Only now I'm permitted to go down to my minutes charts. And what I see on here is something very similar. I want to look, let's use just order blocks today, guys. Let's look at the trading model. Daily candle direction. We have decided together as a team, through me yapping, that we want to trade long using order blocks and fair value gaps. Now we have a higher time frame PD array, internal range liquidity. I should make that. I wait for fair value gaps or swing lows. Do I have an SMT? Yes. Now let's use a 5-minute CISD. Let's use the same concept for now refining and entering trades. I want to use the meaty set of down close candles into my level. This area here is not ideal. Why? It's a little bit too wicky. I want like deep down close candles showing that price is being pushed into there, manipulated with SMT, and then changing delivery state once we close above it, engaging high frequency trading algorithms. Let me go down my time frames. This looks nice. I see an inverse hammer right here is my last candle. This looks very nice on the 4-minute. On the 3-minute, again, this wick I don't love. On the 2-minute, right? These wicks, it's not bad. This 2-minute's not bad as well, actually. And then on the 1-minute, you're just going to see all of these candles, and there'll probably be multiple order blocks, right? Order block, order block. There's too many candles here. So let's go back to this 4-minute chart, which I really liked. And again, this isn't necessary. You don't need to refine you can just stick on the 5-minute chart, right? The CISD that we're going to notice is right here. That is our change in state of delivery. What does that mean? When price closes above this open, and you get a market structure shift, so you get both. So whether you're a CISD trader or an MSS trader, you get both. Institutional algorithms will now be firing this specific area of price for longs. They will be inducing, and what will not be violated is this low. Price may come into here. This is what Romeo teaches as a swing failure. You have a turtle soup, and then a turtle soup is almost always accompanied by a swing failure. Almost always. Look at ES. Almost always accompanied by a swing failure, because this is where price will now induce, and this is the protected low. And sometimes because of spread, price might even wick through here because of brokerage spread, which is why I tell you guys to keep your stop loss, right? Generally speaking, at a candle body closure through the low. I know it's not ideal, and that's only because brokerage is spread, right? And it happens all the time. But this is the protected body low. If it goes below here, you're wrong. I was wrong about my analysis, and this is not a trade I want to be in. So now, in this zone that I have here, I'm going to refine it, right, based on, again, that meaty candle idea. Nice meaty candles, right? I could even call this my CISD. Perfect. Where is an area inside of my change in state of delivery, right? Changing state of delivery. Let's again look at what we're failing to do. Again, it's all the same thing. Look at these up close candles. What time frame are all of these up close candles quite meaty on? All of these, right? That right below that in the swing low that forms our SMT. 10-minute, 15-minute, nice. 15-minute, nice beefy up close candles. Failing to change the state of delivery below those candles. Failing to produce an order block. Failing. Instead, we switch character, right? Market structure shift or CHOT, whatever you want to call it above here. And we create a change in state of delivery that's bullish. I can refine my zone to this PD array. Nice. I have a 5-minute fair value gap in here, which I will mark out. And this is the model I teach you guys, and I've taught you guys for a year. And people, my students who have been with me for a long time, bread and butter, right? Hourly, SMT, MSS, 5-minute market structure shift, long the fair value gap, target the range or the liquidity you're targeting, right? Let's say it's there, EQ of the range, stop loss below the low, boom, good trade. Here, we're just refining using CISD, and what I like to do is now go down to my lower time frame and look for even more confirmation. Again, let's keep, for the sake of beating the argument like dead, let's use an order block again on a lower time frame. So you can see we change the state of delivery and then we come back into the range. Fantastic. I'm not going to enter before 9:30, so that's off the table. I'm not entering before equities open. So I have an area, context area to get involved. Let me use CISD again. Okay, I can see on equities open, we come into my M5 BISI. Let me look and see if I can maybe spot something on a lower time frame. Oh, cool. I form SMT, right? Right as equities open, boom. Cool. That's giving me some more context about my area. Now let's use change in state of delivery again. I have these meaty down close candles here, right? Then we have this one large down close candle, right? We already changed state of delivery above here. And then we get this liquidity sweep with SMT, right? That we just talked about. Now I have this change in the state of delivery on the 1-minute chart. Okay, let's just long the open of that candle because it's after 9:30, it's permissible. Cool, longing that, risking a closure below this low, right? I mean, it's not ideal. You're not getting the top, you're not getting like bottom ticked. It doesn't matter. That's what I'm telling you. The entry doesn't matter because what I do teach you is just to long the fair value gap. Long 9:30. As soon as we come into the fair value gap, just long somewhere in here. Anywhere. It doesn't matter anywhere. The stop loss, no matter where you long, is going to be a closure below this low, context area low, right? Targeting the high. There's your trade. Then you'll notice, oh shit, I didn't get involved because I don't trade before news. Good job. You don't trade before news and you're not profitable. Very good idea. What else can you do? We can use the same concepts again, order blocks, right? CISDs, to frame more trade theses. So as you can see, price expands, leaves a breakaway gap in here, right? Again, I want you to pay attention to this candle. This wick, right? On a lower time frame, the consecutive set of down close candles that price breaks above, right? We don't get a market structure because it's a wick. Yeah, but what is on a lower time frame a wick? It's a body. So let's go down to the point at which in time where this is just a body, no wick. Okay, nice. Right here, I have a change in the state of delivery. Again, this is a change in the state of delivery, and there's probably an SMT at this low as well. Because we changed state of delivery, it's very likely we formed SMT at the lows. Right, we put in a double bottom here. And the YM gives us our divergence, I believe. Again, this is really just beating it dead, but there we go. Right, we get the sweep right here of these lows. So here's our other SMT. This doesn't matter because you're not going to be looking at these charts for the most part, but say, for example, just for the sake of continuity, yes, we get another SMT, we get our change in state of delivery, boom, we have a nice fair value gap. Inside of this fair value gap, what the hell do you think we're going to get? Another SMT, right? That's going to tell you that price is reversing out of this accumulation. Here's another entry using CISD. Same argument, enter on the SMT, right? Or even enter on the change in state of delivery here. It doesn't matter because once price is closing through these down close candles, it's going to find support at them. So there's multiple entries. Here's the SMT in the gap. You can long this. Say you don't want to trade the 1-minute chart. Fantastic. Stay on the 5-minute chart and we'll use the concept again. Price expands, right? Expands higher, comes back down. This set of down close candles, is it a high probability order block? Well, what do we do to define a high probability order block? Right? We look for our conditions. So let's look at the chart. Does it have a liquidity sweep, first of all, of any liquidity? Yep, it sweeps out this candle low, right? and it comes back in to this 5-minute fair value gap. Very small, still a gap. Still a gap. Now look at the SMT formed. Massive SMT, right? London lows and the New York AM lows. Huge SMT in here with the YM. Fantastic. Is it an A+ order block? Yes. Once price closes through the open of these two down close meaty candles into our inefficiency, right? Inefficiency here, SMT there with the lows. The opening price will be spammed by high frequency trading algorithms, by IPTA. Fantastic. This is our change in the state of delivery. All the qualification for this order block is met. Price moves higher. Now in the PM session, right? Same exact logic. You guys saw me call this trade out, right? It was this trade right here. There we go, right? Looking for hourly external range liquidity. Thesis long. H1 BISI plus SMT, 5-minute CISD, okay? Here's the area. Context area. Here's our PM session gap, right? Here is the change in state of delivery. And all I did was refine that change in state of delivery on a lower time frame, which I'll show you in a second, right? Target the buy stops. Exact same logic. Again, we're using it exactly the same way. Now we're using CISD for entries. So 1 hour, 5-minute. Let me find my SMT before I even look to get involved. I need to see my SMT in here. There's my SMT. Perfect. I can now look for entries. Let's use CISD as a tool. I want to look for the meaty set of down close candles into here. I don't like these wicks. These wicks are lower time frame bodies. So in here, what that shows me is that there is a body that goes up and down in here. Let me find that body. Ah, here's one right there. Nice. Here's the up and down body. Let's see a 3-minute chart. Maybe it's all continuous there. Perfect. 3 down close candles. There's the body, right? 2-minute chart. You'll see the same thing. 4 down close candles. There's the up close body. The 1-minute chart. You're going to see like 7 down close candles. But again, there's some breaks in here. So let's go back to the chart that looks the nicest. Again, it doesn't matter, guys. It's just lower time frame confirmation. It doesn't matter. I don't like that wick. See what I'm doing? I'm just filtering. I don't mind this one because it has 3 meaty candles. Ah, this looks nice, right? 4 meaty candles and this small wick here. Here is my change in the state of delivery. I'm just refining what you saw in the 5-minute. If you don't want to do that, don't do it. If you don't want to do it, just say 5-minute chart, right? CISD is going to be above like this high or this high, which I showed actually, which was this high. But after we close through here, I don't need a market structure shift now. I get it. Look where I get it. Right here, market structure shift, right? It's the same concept, just using 2 different things. Market structure shift. Now I want to refine a zone in here, knowing this is my pivot low. Swing low will be protected in the market. So I get my chain and state of delivery. I'm going to zoom down into a lower time frame for the sake of an entry. Okay, we close through. We come back into the range. I see a fair value gap. I see 2 fair value gaps in here. I'll just enter on this one, right? Once we close above and we come back in, this is good enough for me, right? This is a nice area I'm okay with longing. Look at how the bodies hold, guys. See how it doesn't matter? If you choose the fair value gap here, you choose the open here, you choose the lower fair value gap. Look, the narrative is going to be that PD arrays will support. If you choose the 1-minute order block, the extreme order block, great. You got it. Fantastic. You bottom ticked. I don't care where your fill is, and you shouldn't either for the most part. I'm going to choose that fair value gap, right? Because I have my chain of state of delivery, right? I retest it. And now where's my target? Go back to the 5-minute chart, right? External range highs. This is my hourly ERL. So now I'm moving from internal to external like always, and I'm using CISD in addition to MSS, which I've already taught you to just position myself in a trade. That's it. Now we're using it as a tool to get in a trade. There's your trade. There's your stop, right? And it looks something like that, right? I use this 5-minute candle to CISD because I didn't actually refine it on a lower time frame to these candles. It doesn't matter. It's the same exact trade, right? Roughly the exact same entry. I use this 1-minute fair value gap in both cases to get involved. and I took a 4R trade, something that looked like I must have gotten filled right here because it was exactly 4R at my TP. So wherever this gives me 4R is where I got filled. I don't know. You guys get it. Something like that. Something in this gap is where I was filled, and that's how we use the change data delivery to execute and use it as a PD array for entry. Very similar to a fair value gap, but you notice in this case, what am I not offered on the 5-minute chart as a part of this this price run? I'm not offered a fair value gap, am I? The displacement isn't here. It's a choppy delivery, but the algorithmic state of delivery is still there. So I'm not offered this 5-minute fair value gap. Notice, this 5-minute fair value gap is not retraced. Unfortunately, we do not go external, back in, to internal, to external. Instead, we rely and we utilize these down close candles for support, and you can see that. Another question I'm going to ask you, right, is which side of the market is providing support? Look, we fail to CISD. These up close candles, let me go down a time frame. It's such a small nuance, but right, we have this meaty set of up close candles, I guess you could say in here. Small retracement. We fail to actually close below the low. What do? It's a rejection block. We wick the liquidity. So we're wicking below the low. We're not closing below the low, right? In this case, what are we doing? We're closing above the down close candles. We're closing above them. And we have the context, right? So some people will be like, what about this CISD right here? It doesn't matter because we've already changed the state of delivery, right? Out of our PD array of interest. No hourly charts, no minutes charts. That's why we don't use them as like a pattern. We use it only with narrative, and you'll be able to see, right, that it works. And then likewise, right, we come into the hourly ERL. Let's do one last example, and then we'll do questions. I want to look for the meaty set of up close candles into here. This is a wick. What does this look like on a lower time frame? Because I have my SMT. So somewhere in here, in this price leg right here, there's going to be a set of up close candles. I want to see how those up close candles look and how we react to them. Go down time frame. Right. Still a large wick. Large wick. That's better, right? Those candles are better. Oh, these candles are even better. There you go. Right? Meaty up close candles all the way in. The least amount of this wick is contained in this down close candle, not the up close candle. So this 1 minute change in state of delivery. Again, notice what isn't retraced. The FVG. This is a breakaway gap in the market. This is a breakaway gap in the market. Where does our market structure shift occur? It actually occurs below this low. But all of these up close candles, this continuous state of delivery being delivered higher, right? The 5-minute chart is just one candle, but it has this large wick, which we want to account for. You can see once we close below all of those up close candles, this is just a small retracement in this big move, right? Price comes in, engages the open of that chain of state of delivery, breaks down again. Look what it leaves. Another breakaway gap. Now we have 3 breakaway gaps. We're going to use the same idea that we've been talking about to frame another entry. You want to get involved in price because you've seen SMT. Here, let's qualify the trade quickly and then we'll do questions. Right? You've seen SMT at these highs, and then you've seen a lower time frame SMT right here. Double SMT, double time frame SMT. You're playing the open, low, high close of the day. And we have really, really nice failure swings. Really nice LR. You want to get involved in this. But you'll notice in the 5-minute chart, there's just no reaccumulation. Look, no fair value gaps. Nothing is offered to you, right, until we reach this low. So let's use the concept that we're teaching about order blocks. It's permissible to do that. Right? It's another way to get involved in price. So you can see we leave a breakaway gap here. And why do we leave a breakaway gap? Because all of these this set of up close candles right here, what does that look like? Let's maybe find the more. There we go. Look at that. Look, all up close candles. You see that? Big up close candles into the high here. Let's even go maybe a higher time frame chart, like a 3-minute chart, right? Big up close candles into the high. Very little wick in this up close candle, right? This is a change in state of delivery. There we go. Price doesn't need to come back into this inefficiency. Look at where it's keying off of, guys. It's keying off of the change in state of delivery, or some people will call this the breaker, which it also was keying off of, right? 1 PD array, 2, 3. Now again, how do we know price is not going to come up into here? Is price, say we have this down close candle, is price coming up and closing below or closing above with displacement these down close candles? No, right? This consecutive set of down close candles here. We're not creating any change in state of delivery higher. Instead, what price does is it trades lower. Fantastic. Big, meaty up close candle in here. We trade through it. We print on top of this big, meaty up close candle a fair value gap. Now is your opportunity to either short the fair value gap, short, right? So price comes in here, comes back up. You can choose to short here. It's a little bit aggressive, albeit, but it's your choice. But then once we print these overlapping arrays, right? Order block, fair value gap, very nice short entry right in here. Then again, you'll notice price does these same things. The draw hasn't been met yet. This is the draw, triple equal lows, right? Price comes into our fair value gap. And do we change the state of delivery, right? So this was, we're failing to close above this set of up close candles or down close candles. If price did this, then it might come higher into this inefficiency, but it's not. Notice, respects the fair value gap, right? Comes into this order block, right? Change state delivery lower. Then what does it do? Look at, again, I'm going to say the same thing. High probability order block, right? The meaty set of up close candles into this array. Let's see if it forms any SMT. Beautiful. Look at that. Okay. So we form SMT right here with the Dow Jones. Beautiful. The meaty set of up close candles, right? Again, on any time frame, SMT engages a PD array. Fair value gap, +1 for high probability order block. SMT, liquidity sweep, +1, right? Once we close through this open, look where IPDA will refer to. So again, we're just chopping. This is the set of up close candles that we need to close through this open. Now look, we have another order block created. What's overlapping the order block? A breaker block. And again, I don't even trade the 1 minute, but I'm showing you it's fractal. Comes into the order block and breaker, uses that open, trades lower, and descends into our liquidity. Now you have to ask yourself, are we going to reverse here or are we going to move lower, right? Well, you can do the same exact logic we had earlier looking at this key level. In this key level, we have printed, right, down close candle, up close candle, this up close candle right in here. Look at it. It's all fractal. Let's find this one up close candle. Look at this. This up close candle on the ES comes in above this high. It's a 15 second divergence. It's all fractal, right? Look, this does not come above this high. Now again, this is not tradable. I don't trade the 1 minute chart personally, but I'm teaching you it's all the same. Doesn't matter what time frames you trade. Comes up, liquidity sweep, shifts below. The market structure shift doesn't happen until here, right? Low, high, low, all right, I guess we can have an intermediate swing right here. Once we close below this candle, this becomes the change in state of delivery. Price refers back to it, right? Comes up, fair value gap. The fair value gap overlaps this wick. You can go short in there because we are not closing above these highs and we're still respecting down close candles. price descends lower. And then at the end of the day, right, again, how can we tell bias, right? Okay. Meaty down close candle. On a lower time frame, it's going to be consecutive down close candles, right? Then you can see in here, where do we form our change in state of delivery? Let's say we form it above just, I probably wouldn't take a trade in this last macro, but I'm saying there's probably a good CISD here to go long from. Just trying to see what time frame to be on. Let me see if I can venture and find it. Okay. All right, well, this is pretty clear to me, right? Once price closes through here, again, I don't trade this last hour of macro, especially on a Friday. Once price closes through here, right? Zoom out, zoom out, zoom out. First of all, we have our SMT. I want you to see the SMT is with the New York lows, with the YM. So it's this big boy SMT that exists right here. Okay. This becomes a high probability order block, right? Meaty down close candles descending into the key level, which is what? Remember, hourly FVG, key level. Then we have an SMT. So now when we close through that meaty down close set of candles right in here, open right there. This is now a change in state of delivery. Price will not, once it closes through here, refer back to this low. Now we are going to be using this area internal, this order block, for reaccumulation, redistribution. So now what you can do is you can find an entry somewhere in here that you want to take, right? So maybe you see that price comes into this set of down close candles, which is a part of this one, and you want to long the open of this candle. Fantastic. Choose that candle, right? Wait till it closes above, comes back in, or even there's a fair value gap right here. Perfect. No need to overcomplicate it. Fair value gap after we close through, right? Change state delivery, fair value gap. You got to risk the low, which is a big low. It's a big stop loss actually, but where is the target? Let me find something that it could draw into. Again, it's the 30-second model. Let me choose a 5-minute inefficiency. You know what? Let me choose the most logical place on the chart for a price to come into. Let me choose this breaker. Something like that, right? Price already comes back into this area right here. Comes in, interacts with this wick. Right, let's choose this down close candle here. It's this breaker, which price hasn't come into, which overlaps this tiny ass volume bounce. Again, this is a 30-second model. So you have to be very kind of like, you gotta choose something to get involved in, right? So I don't know. There you go. Say you want to target there. That's not even a 1-to-1 R trade, so maybe you have to make your risk this rejection block. But again, it's just a confirmation tool you can use, right? And as you'll see, you'll probably never get a market structure shift in this mess. Nothing is clean about that, but price action has still put in a swing low here. And if you can identify the CISD, right, you can find an opportunity to scalp. And it's really nice when price quickly like spools away from your price targets. You'll often find that like this entry in here in this range is the best entry because price will aggressively move away. But then you can also use that logic to miss out on, catch this entry right here. So today we've learned a couple things to rehash. We've learned, firstly and most importantly, using fair value gap or using order blocks or chain to state delivery as a bias tool, right? We've learned the difference between shifting states of delivery and failing to do so. We've now also learned how to qualify high probability CISDs and what to look for, meaty down close candles. We've also learned how to use them for entries. And a lot of traders, guys like AM Trades, for example, he only uses CISDs. If you've looked at his kind of market reviews and if you look at how he trades, right, this is his entry right here. Well, what do we see right here? Meaty up close candles, forming SMT at the previous day high with the YM, right? On the hourly chart, what does this become in here? Change in state of delivery, right? Once we get that CISD, AM Trades is not looking to refine, just shorting this, right? Covering the high, targeting the lows. So there's ways to do it. And I'm not gonna tell you how to use CISD, but recognize that it happens often before market structure shifts. It's often used as a way to refine levels, refine targets. And in this fair value gap, for example, you can find a better key level. What's up?
We need to leave.
I thought you were dropping them off, you said.
Yeah, we are, but where's the stuff?
Okay, 1 second. Guys, my dog's going to daycare, so had to get his stuff ready. All right, cool. So To recap, today we've learned a couple things. What is CISD? It's an order block, right? Formation of an order block. It leads to a protected low.
Fees, you're not streaming anymore.
Oh, sorry.
All good.
It results in a protected low, right? We can use CISD for one, and most importantly and most underrated, bias, right? Determining true institutional order flow. I use probably CISD most for what is being respected, what is being disrespected, and how can I determine what institutional order flow is inside of areas where it could be 50-50. Could be 50-50 in here, but I'm getting clear institutional order flow signatures based on the formation or failure to change delivery state. Very important, right? We can also use CISD for entries. We can use it for targets. And we can use CISD, right, for our time frame alignments. It's a Confluence tool. So that's the lecture on CISD, order block formation. I've been using a lot of CISD more recently in my entries, as you'll see, because I really I've really just been enjoying, right, having a specific level to key off of and utilizing that in conjunction with my internal range liquidity to take trades. So for example, I can show you like just one quick example. Generally speaking, right, I have an hourly internal range. I'm bullish on the...
That list that you deleted, can you just, was it still up there?
Oh yeah, sorry.
Or,
I deleted it all.
or,
One second. I'll
or you
bring
can
it
just
back.
say, I was just kind of writing them out. Okay, cool. Thanks, just, sorry, 1 second.
Yeah, no worries.
And what do you mean exactly by that last one, our time frame alignment?
So in addition to using IRL, ERL market maker models, right, we can also use CISD on those same time frames using the same alignments with internal and external ranges when we're not offered perhaps fair value gaps, or the chain of say delivery gives us a cleaner entry or a more precise entry, right? It's another tool we can use in our market maker model toolbox. And here's an example of an entry. Like let's look at let's look at Monday, for example. Or let's just look at right here, Tuesday. Right. So we come into our area of interest. This is again, daily candle direction is bullish. I did a recap on Monday, so you know why I was bullish on Tuesday. Right? Daily candle direction is bullish, targeting right, previous day high. Fantastic. Now I have my key level. I'm looking and scouting for an SMT in my key level to see if I can find one. So I can qualify even looking at my minutes charts. If not, no minutes charts. Right, so on Tuesday, I do see my SMT. Oh, it's this huge SMT. Okay. So it's this SMT right here with my Dow Jones. Nice. Sometimes I zoom too much in. I forget the Dow has been trading like way lower. So I have my large SMT formed, this Monday low right in here. And then maybe I can find a lower time frame SMT as well. Yeah, I have this SMT with the ES as well right here. Okay, so I have multiple SMTs on the indices, so I can qualify this area right in here for a smart money reversal targeting previous day high. I can now drop down my minutes charts and I'll use my alignments. again, on the hourlies chart, with this idea of CISD, right? So Friday traded into our daily BISI, the series of down close candles, right, that trade into the BISI, the consecutive set of candles. This is a retracement candle, but this nice meaty set of candles right here, perfect. I can use this if I want. I would prefer to use this. This is going to be my higher time frame CISD, and look at where price comes into. Then look, once we close through it, right? Price refers back to the open, but not just the open, but the down close candle printed inside of this. Remember, we closed through it here. The CISD has been qualified right here. We print this down close candle inside of the range of our order block, the meaty set of down close candles. Price comes immediately back into that open. Right? High probability breaker as well. High, low, higher, high, inside of the range. Now I have tools to qualify reversal, right? My order block, which I can just call this an order block now instead of a CISD. Same thing, exact same thing. Now I go to my 5 minute and I can use the same logic, right? Along with IRL and ERL. So we come into my key levels. Then out of this order block, I'm going to be looking for a lower time frame SMT as well, right? Because that's another nice confirmation to have. Tuesday 21st. And again, a lower time frame SMT is not necessary, but it'll often be given. Is there anything with the Dow? Sorry. Ugh, I hate back testing on TradingView because it never syncs up my cursor with my thing. Sorry. Ah, yes. Okay, so here is my SMT on the Dow. I'll just mark it on the Dow. It's right in there. It's actually this candle. Okay, cool. Lower time for messaging again, it doesn't really matter. It's not the most important thing, but it's nice to see that, right? Qualifying a reversal. Now I want to use again the consecutive set of down close candles because again, no fair value gaps are offered in this leg. Notice in here, there is no fair value gaps. There's fair value being offered in terms of discount and premium, but no gaps are being offered in the market. Because there are no fair value gaps, what I can do is I can use my change in state of delivery concept, right? And look for these series of down close candles. These look nice. These look really nice. 1, 2, 3, 4. All the way in. Right, mark that out. When price closes through here, it's now my change in state of delivery. Now I can look for anything in here to get involved. So now I see these down close candles. If price comes back into that, this is going to be my order block coming off of this series of down close candles, right? I also have, what else do I have? Maybe I can zoom down a time frame. Let me bar replay it so I don't have to keep. Let's go down to like a 1 minute chart, see what I can see inside of that area just to see if there's any gaps I can get involved in. So once I change delivery state, out of here, perfect. I have a nice fair value gap, nice. There we go. Now I'm offered an FVG on a lower time frame with a 5 minute context, right? Now market should not refer back to this low. This should be a protected low in the market. So I can just long here, right? Long it when it comes in. Go back to my 5 minute chart. So that's where I'm choosing my entry, which coincidentally overlaps, right? The open of this candle, this order block, for example. And now I just want to target the smooth edges, right? These are really nice smooth edges right here. Asian highs here, and then we have London highs rather right here, and then we have a New York failure swing. So that'd be a very nice first TP, right? And then obviously previous day high is going to be your second TP, and then you can even use something like a standard deviation projection to get really specific about where you want to target. Maybe you can say the high of the day will be put in at 2 standard deviations, right? And there you go. and you can hold some runners. But realistically, you have buy-side liquidity targets. Fantastic trade, and you can notice you're not offered a fair value gap, actually, an entry on a fair value gap until the PM session, or until lunchtime, where we get a consolidation, manipulation, leaving again really relative equal highs. We come in, we tag it by 1 tick, shallow raid, right? Double purge, sweep the high, induce relative equal highs still here, right? These are all relative equal. And then we come back in. Finally here, we're offered our 5-minute fair value gap. But in this price leg higher, there is no fair value gaps offered. This is a breakaway gap. This is very choppy. But there's still a good entry, right? Using a chain and stay delivery argument, and then a lower time frame inefficiency or an order block, something like that. And then in here, for example, right, you can use this 5-minute gap. And again, the argument still applies. If you want to not use a fair value gap and instead use a chain and stay delivery, what you can do is you can go back to maybe a higher time frame chart, noticing. Yeah, I mean, there's not even, do we even come into this gap on anything? I'm just trying to see if there's any way you can use a PM session time frame alignment. I don't think so. I don't think so, but let's check. Tuesday 21st. I'm so sorry, guys. I'm so out of it. Yeah, there's no FVGs offered this entire day on the hourly. So I really do think that on a day like today, like the Tuesday, using the idea of chain and stay delivery is honestly the best thing you're gonna get, right? Because in here there's no hourly FVGs. There's a 15-minute fair value gap in here. But yeah, that concept also works right above these highs, right? So once we close, right, above the series of down close candles that come in to all of this lows, right? So here you get a chain of stay delivery, and also here is an order block. Anything in here is valid. Once we close through here, you have the 50-minute fair value gap, and then you'll notice how to tell what institutional order flow is. This is just follow the down close candles, right? Track them, and that's what you've heard me talk about a lot, about order flow and tracking up and down close candles. Look at which candles are supporting and resisting price. Right, we first of all, we come down all the way into here and we manipulate. So now we want to see if this series of down close candles can support price. As you can see, price isn't going to come below this low. This low is now protected. And what do? We form some more down close candles off there. This is all order block. Price comes into the mean threshold, moves higher. Now we can keep using this concept, looking at the opens of meaty down close candles that rebalance arrays. Meaty down close candles, come in, tap it, right, move higher. Down close candle, sweeps out liquidity, closes above, open, into it. Again, what do we say about this? This wick here is an up close and a down close candle. What this looks like on a lower time frame, this. 2 candles, and one engulfs the other. One is like that. So what we can do is we can refine this zone, right, which has a fair value gap in here actually, that is offered. Right in there. You're going to refine that zone on a lower time frame to find where that candle is actually just an up close and down close candle. No, it's actually just a large wick. But yeah, anyways, same concept, right? Price comes through, closes above this series of up close candles, retests it, moves higher, comes back into the fair value gap, and then yeah. Again, the series of down close candles into the fair value gap looks like that. Would you look at what price does when it trades above it, right? Again, we're just qualifying which candles. Again, down close candles, price trades through, comes back in, and you can keep tracking order flow like this until you reach a higher time frame array, in which case price will likely reverse and not give you that same level of institutional support. Okay, kind of rambled there at the end like always. Any questions about change in stay delivery, how we can use it, what order blocks are, why they're important, anything at all? No questions? I lost like most people. Kind of a rambly lesson near the end. Awesome. Okay, guys. I am going to upload the recording for those